Hi, I'm Dennis with Century 21 Celli, and this is our Lender Spotlight series. Our Lender Spotlight series is designed to give our fans and followers a glimpse into the people that we collaborate with on an everyday basis to get the job done for our clients. And so this is not something that lenders sign up for or ask to be included on. This is something that we reach out to them. It's by an invitation only. So you'll only ever see lenders on Lender Spotlight that we actively work with and that have been recommended to us by our agents and our agency owner, of course, Craig Celli. And I say that because Steve Mix is from Fairway Mortgage, and he's a perfect candidate for something like Agent Spotlight Lender Spotlight, excuse me, because the very first line on his LinkedIn profile is he has an interest in building lasting referral relationships with other service professionals. So, Steve Mix, welcome.
Thanks for having me, Dennis. Appreciate the invite.
All right, so we've it's been a while since you and I have done one of these. So why don't you give us an update on where you are now in your career and what types of things you're up to in the real estate mortgage business this year?
Yeah, sure. Been kind of a crazy year. Everyone assumes we're slow, but we are not slow. We are still working on pre-approvals, and we touch files much more frequently than we typically do in a normal cycle. Right now, it's still competitive to get offers accepted on a property, and we're working with all of our agent partners to make sure the borrowers are ready to go and have everything buttoned up so they can jump on an offer and they know what they can afford, especially with the rising rate environment. That number is a moving target these days.
Yeah. So something I do want to ask you about is the whole pre-approval process, because to those of
Mhm.
us not in the real estate business, it sounds a little odd phrasing, like you get approved before you get approved. How does that work? Why
Yeah.
don't you explain to us the importance of getting pre-approved and what exactly that process is?
Yeah, sure. And I'll take it one step further. Is a lot of times people will say they're pre-approved, but they're actually pre-qualified.
Mhm.
What we are typically doing nowadays, 99.9% of the time, is a full pre-approval. The difference between a pre-qual and a pre-approval is pre-qual. I look at your numbers and I say, yeah, I think you're going to be able to afford that. I'll pull your credit and do some rough calculations on my own and be ready to go. Full pre-approval is gather every document we know an underwriter is going to need, put it in front of that underwriter, have the underwriter look at your income, your assets, every component that we know is going to go into being able to purchase a home based on a price that either you give us or we kind of figure out what a max is,
Mhm.
and then have that button up full pre-approval. Then the only thing we need to do is when you do find a house is do an appraisal and get the contracts and kind of just dot I's and cross T's at that point.
Mhm. Great. So, if someone is interested in working with you, how would they do that?
Uh, best way to start is just a quick phone call so we can go over kind of overview of what they're trying to do, what their hopes and wants are, and then from there, just depending on their technology savvy, we have you can do everything online, or I can go old school and write everything out. It just really depends on what the customer's comfortable with, how much time they have. We can go as fast as they need to. And we want to make sure that they're if they need to get an offer in, that we're ready to go.
Something I think a lot of consumers don't realize, even after they've purchased a house, is that it's not just one standard thing applies to everybody. You go in, you apply, you either qualify, you don't qualify, and then that's it. There are actually different loan products out there that might fit to different people's situations. So could you talk a little bit about that?
Yeah, sure. Yeah, there's definitely and there's so many different variables that go into being able to qualify, and or whatever program that might be the best suited for what you're trying to do. Veterans Day is around the corner. We offer VA loans. It's loans that are available to service men and women, either active duty or honorably discharged, and they can use that. It's a great product. You can get into a primary residence with zero down, and that's really the only product left that you can do that with.
Mhm.
So that's a great product. Obviously not available to everybody, but depending on if you're trying to buy a multifamily home, We have specific products for that. Depending on maybe you have dinged up credit, we have products for that. Um, you know, Different property types. Condos. You have some products you can use on condos, some you can't. So there's a lot of variables, and we really work with the client to make sure they get exactly what they need.
Now, let's talk a little bit about the people with questionable credit, because I know I've sent a lot of people to Craig, who just, in the course of normal conversation says, oh, I guess I'm going to be renting for another 5 years because I just ran my credit and it's lousy. I said, no, call one of these professionals, because they can almost act like sort of a financial advisor for the real estate sector. Like, this is what you need to do to get your credit in order to qualify, maybe much sooner than you think you'll be able to.
Yeah, that's a lot of times with credit, it's more just a time, and 5 years would have to be the worst case scenario. But if somebody is looking to buy, and there are blemishes on their credit, we can get them fixed, fairly quickly. And when I say 3 to 6 month time frame, depending on what happened and what the damages are. And tell them, hey, you have to do X, Y, and Z, and then you'll be ready to go at 10 months from now, or 12 months, or 18 months, whatever the time frame might be. And some, depending on what the issues are, we may refer to a credit repair agency that will walk them through every step if it's really intricate, tons of credit lines and big issues that need to be worked through. There are partners that we deal with that will help them specifically with that. I look at credit reports all day long. I can tell 99% of the time I can tell them the basics that they need to do. And a lot of times there's very minor things that will just if you get your credit score up another 10 points, you're gonna get an eighth better in rate. So sometimes it's simple little things that are just going to improve the rate just a little bit.
Absolutely. Great. And let's talk about how you think the pandemic actually affected the housing market. I mean, I know personally a lot of my friends that were in sort of communal living situations, apartment buildings, condo buildings, they really wish they had a single family home. And I know a lot of them started looking for single family homes right when, things started opening back up again. So what was your sort of experience from your side of the market?
Yeah, a couple. I mean, obviously, we refinanced everybody that was alive, yeah, just about. And did definitely saw a lot of people moving from city to either suburbs or suburbs to. I'm licensed in New Hampshire. We did a ton of loans. People buying homes up in the lakes and the mountains. Just trying to get away from population, and be able to go outside and have a little more freedom. Then, like you said, if you're living in the city and you can't get away from the sprawl.
Yeah, I know. Yeah, it must have been. I mean, I have a single family home, so that, and it was even worse for me having to stay. And I can imagine being cooped up sort of in an apartment or a smaller living situation, especially because I know a lot of the people that I know were just putting off buying their homes, because whatever. And then all of a sudden this came along and they couldn't do anything for 18 months. So that was an interesting time.
Absolutely. Yeah. Glad we got through it. Hopefully we're done for a while.
Yeah, definitely. So things are sort of getting back to normal, but let's say that you yourself needed to, without naming names, if you yourself needed to hire a real estate agent, what are the types of qualities that you would be looking for as far as for your personal situation to buy a home for yourself?
Yeah, I definitely want to see somebody that knows the market well. If it's a specific town or a couple of towns that you want to get in, you want somebody that's tied to the community and understands it and knows the difference in neighborhoods, what's the best schools and whatnot. And then the other component I'm looking for is somebody that's going to negotiate on your behalf. That it's a big purchase and or sell if you're selling, right? And if if you're in a competitive environment like we are right now, having someone that's going to be a good negotiator is huge, I think.
Yeah, absolutely. Great. So anything else you'd like to talk about with us today?
I guess I just mentioned a little bit. I get questions just about every day now on the rising rate environment,
Mm-hmm.
and what we see and what we're expecting, and we've they've been creeping up, all year long. We're kind of back to where we were about 20 years ago, believe it or not. And I don't think I'm not sure where the ceiling is. If I knew that, I probably wouldn't be working right now. But everything that we're reading and all the economists and forecasts all kind of see them plateauing eventually, and then dropping a little bit. And I think we're going to be in the 6% or 7% range for the next 10 to 18 months or so. Hopefully I'm wrong. Hopefully they come down. That obviously would help loosen supply, because I think a lot of people own homes at 3% interest rates, and they don't want to sell and then go get another home at 8%. So I think that's impacting inventory. I think people that are selling are have to sell because they're moving for work, or they're retiring, or whatever, and you're not seeing move ups. I live in the Cape, and now I want to go buy a colonial to have more room. People are doing additions, that kind of stuff, rather than sell. So I think if we see rates kind of just flatten out a little bit, and not have that steady rise that we've been seeing in the last 4 to 6 months, then we'll kind of get back to business as normal, and people will feel a little better about, as we mentioned earlier about pre-approval. We'll look at how much can you afford. If I approved somebody 3 months ago and now the rate's 3% higher, their purchase power is impacted, and so if I talk to somebody today, I'm qualifying them on a much higher rate than market, just to be safe. And then when they find something, we can always pull back and give them the real number, so they kind of know what they're ready for. But I'd rather tell them worst case scenario, and then get a better number down the road.
Sure. Now, what would be your advice if someone said, "Well, why can't I just rent and wait for the rates to fall down, to come down before I buy?" What would be your advice to that person?
Yeah, I would say you're paying somebody's mortgage, whether it's yours or your landlord's. If you're short term, I'm in a place for 3 months or something, I get it. Yeah, go ahead and rent for a short term scenario. But if you're going to be anywhere longer than a year, if you do the math, and it's an investment. It's everyone invests in their 401k, and you're at the whims of the stock market with that. If you have a property, and you're, like I said, you're paying a mortgage, might as well be yours. And it's an investment at the very least. If you're on a short term, and if you wait, who knows what a year from now is going to be. Rents are going up accordingly with the rates. So I don't see a rent being advantageous. That's so much cheaper than purchasing.
Well, Steve Mix with Fairway Mortgage, we really appreciate your time today, and we'll scroll your contact information on the screen and the end screen for the video, so everyone knows how to get in touch with you. I know you're a hockey fan. Any predictions for the Bruins this season?
I don't think they'll have the record they had last year, but I think they'll go further in the playoffs. How's that?
Okay, fair enough.
All right.
Well, thank you for joining us today on our Lender Spotlight, and we look forward to seeing you soon.
Sounds great. Thanks for having me again, Dennis. Take care.
Take care.